Good evening, ladies and gentlemen. My name is Abraham Imoisili, a legal practitioner, barrister and solicitor of the Supreme Court of Nigeria. And also, by way of niche practice, I am also a tax consultant and, as you all know, an author of the book Imoisili on taxation law in Nigeria. So today our discussion will be on taxation law at LLB level, undergraduate level. Although of course ideally the class is meant for undergraduate law students offering taxation law as a course. I know that many faculties of law in Nigeria do not offer taxation law, or of course taxation law is basically an elective, so some, even if they are in a faculty where taxation law is offered, may have not taken it, may have opted for other electives, and then after being called to the bar and being in practice, they might want to specialize in taxation law. So the class is also useful for those categories of persons. Okay, so the starting point of our discussion on taxation law in Nigeria is, similar with any discussion on all other legal concepts that you know. The starting point will always be from definition, and then you move from defining the concept to understanding its nature, its characteristics, understanding its principles and core objectives, and then with that you are able to proceed to other detailed aspects of the discussion. So the first topic we'll be looking at is meaning and understanding of the concept of taxation. Alright, so we'll look at the definitions. Now, for the definition of taxation, one thing that is paramount is there is no legislative definition. At least to the best of my knowledge, I have looked at the compendium of taxation law, including the compendium compiled by the FIRS. So in all of those laws, there is really none of those legislations that have defined what tax is. Rather, what they have gone to define or explain is the particular type of tax they are dealing with in each of all those legislations. So while in discussing legislation, you would ordinarily look at legislative definitions by scholars, and then judicial definitions. In the case of taxation law, you will only find definitions in the realm of definitions propounded by scholars, and then definitions at the level of the judicial definitions of the concept of tax. Okay, so of course we'll look at the definition of Professor Abiola Sani, Senior Advocate of Nigeria, in his book Interpretation of Tax Statutes and Examination of the Supreme Court Approach, published by the Nigerian Institute of Advanced Legal Studies in the year 2006, particularly at page 74. Right, Professor Abiola Sani SAN defined tax as a compulsory exaction of money by a public authority for public purposes, or raising money for the purposes of government by means of contributions from individual persons. Okay, so if you look at Professor Sani's definition, he is focusing on the aspect of tax being a compulsory exaction, a compulsory demand. And then who makes that compulsory demand? He says, and correctly so, a public authority, which you can call the sovereign, you can call the government of the day. Alright, so public authority, sovereign, makes a demand on the people. And what's that demand? Money. Alright, he defines it as money. Alright, so making a mandatory demand on people to pay money to that public authority or sovereign authority or government. For what purpose? For public purposes, or for raising money for the purposes of government by means of contributions from individual persons. Okay, so however, there are some problematic areas with this definition. One, you look at the issue of money. Tax need not be money, right? In fact, if you look at Ade Paye's discussion on the history of taxation, tax could also be in kind, right? And even in modern time, you have what they call tax relief on the basis of project. Like Dangote constructed the Oroshoki Apapa Bagada Expressway in exchange for tax reliefs. So what you will find there is that he has paid tax, but not by money, but by way of road construction. So it is not correct to say it's a compulsory exaction of money. Right? It can be money or anything of item of value, all right, which is useful to the sovereign for the purpose of that sovereign through the means of raising money. Now, another challenge with Professor Sani's definition is the issue of individual by means of contribution from individual persons. All right. Now, even though it is partially correct that tax is demanded from individual persons, the reality is that if you look at the provisions of the Personal Income Tax Act, all right, as amended 2007, 2004. If you look at that provisions, I think if you look at section 2 or thereabout, you will find that it is not only individual persons that could have taxes imposed on them. That section provides for taxes imposed on a community and taxes imposed on a family in terms of family property or family assets. So as a family, as a group, not an individual member of the family. They will also have taxes imposed on a corporation sole, and you also have taxes imposed on administrators or executors of an estate. So it means that we cannot really say individual persons alone. The contribution is from either individual persons or group of persons are provided by statute. Other than these two gray areas, the definition is ordinarily okay. Another definition, we'll look at that of O. Akonle in his book Nigerian Income Tax Law and Practice, published by the Center for Business and Investment Studies Limited, Nigeria, in the year 1991. At page 4, Akonle defines tax as a compulsory levy imposed on a subject or upon his property by the government having authority over him. All right, so still highlights Professor Sandy's definition. It says a compulsory levy imposed on the subject or upon his property. I think another dimension that you can pick from Akonle's definition is that it's not only individual persons or group that taxes are imposed on. Taxes can also be imposed on the property of that individual or group. Now, even though there is an obligation on the individual to pay, but it is not the individual that is being taxed, it is the property, and there are taxes like that. All right. So, for instance, the Personal Income Tax Act is a taxation on individuals or groups. All right. But if you look at some other taxes like capital gains tax, if you look at like at the state level, if you look at the land use charge, these taxes are imposed on the property, on the asset. All right. And so, because they are imposed on the asset, we can say that it's a tax placed on the property. So Akonle is correct when he talks about the person or his property, all right, or upon his property. So that distinction is a fine line drawn by Akonle, all right. Okay, but when he uses words like subject, it's debatable, but we can give him that. Another definition, we'll look at definition of I.K. Nayeju. All right, in this book, Value Added Tax, The Facts of Positive Tax in Nigeria, published by Cooper Public Affairs Nigeria Limited in the year 1996 at page 12. All right, Nayeju defines tax as a compulsory payment levied on the citizens by the government for the purpose of achieving its goals. Right, just keep it straight and simple. It's compulsory payment levied on the citizens by the government for the purpose of achieving its goals. Okay. Now, in my book, I also propounded the definition for tax or taxation. Now, the reason is I looked at all these definitions, and even though they are largely correct, but the emphasis on compulsory, mandatory, sometimes can be misleading, because you know that especially in a democratic setting, the citizens are the sovereign. The people are the sovereign in a democracy. Okay, so in defining tax, when there is too much emphasis on the compulsion or mandatory nature of tax, it tends to downplay the fact that this compulsion is actually democratically arrived at by the people. All right, so it is the people that agree on tax to be imposed. So the emphasis of compulsory does not mean that government have an arbitrary power to impose tax. So I had that challenge looking at all these definitions, because for instance, if you look at the provisions of section 44 of the Constitution of the Federal Republic of Nigeria 1999 as amended, that section talks about the right to property of an individual, and talks about, no one must have his property compulsorily acquired. All right, but the exception to that right to property is where tax is imposed by due process of law. Okay, now if you go further into section 36 of the Constitution, you will see where it is written that no offense can emanate unless it is made by a written law. All right, so if anything that comes by way of force or compulsion will definitely come in the way of criminal offense where there is disobedience. So it means that for any government to impose tax, it has to be in writing in accordance with section 36, because if it is going to be an offense, it must be in writing. Okay, it has to be in writing so that it can become valid. Now when you put in that in writing, what is the process? The process of putting it down in writing is by way of the National Assembly, the Senate, the House of Representatives at the federal level, and then the state houses of assembly at the state level. Okay, so if we factor that in, members of the National Assembly, members of the state houses of assembly are representatives of the people. So they are the ones who are empowered by the Constitution to legislate on tax. And so it is the people who are imposing that tax on themselves. So it is very, very key. Now, with this in mind, I went ahead and I defined tax. I said tax is better defined as an economic demand made on persons living and or operating within the sovereign territory of a state by the government of that state, which takes the form of payment of monies or some other economic item of value for the use and benefit of the sovereign state by a procedure laid down by the law of that sovereign state, guiding the actions of both the government and the relevant taxable persons. All right, so it is not just a compulsory, it's not enough to say it's a compulsory imposition or exaction. All right, it is imposed by a procedure laid down by law of that sovereign state, guiding the actions of both the government doing the imposition and the relevant taxable persons. All right, so it is the rule of law that will prevail in a democratic setting. All right.